I'm going live. Oh, it's 30 seconds already. Hey, 30 seconds goes by fast. Thank you so much for joining me. This is Business Mindset with SheABOS, and I am your host, Angela Middleton, aka SheABOS. Today is Thursday, March 4th, 2021, and tonight's topics is receipts, finances, and taxes. Oh my, part 2. Last topic, we discussed business finances, insurance, legal protection, and retirement plans. This week, we will discuss business taxes. I need this really bad. And additional aspects of finances. So let's meet my co-host for today. This topic, DeVere Patton, founder and CEO of My Tax Office. DeVere Patton is the owner and president of My Tax Office, LLC, serving the entire U.S. He has been in the tax financial services business for nearly 15 years. DeVere understands that each client's financial needs and goals are unique. That is why he and his staff are committed to creating a personalized approach towards taxes and finances. No two people or situations are the same. DeVere, My Tax Office, has won numerous awards, including, but not limited to, Prince George's County Electronic Filer of the Year and 2018 Best of Forestville Small Businesses Award. Very nice. When you meet someone from My Tax Office, they will review your financial needs, identify your long-term goals, gauge your risk tolerance, evaluate appropriate investments and life insurance products, present personalized recommendations, recommend an asset allocation strategy for you, and provide ongoing support. Whew, that's a lot. They are committed to helping individuals reach their financial goals. And this is why I chose My Tax Office to speak with us today. So I went on social media and I asked for tax preparers because I wanted, again, to support my people. And to be honest, the pickings were slim. And I was kind of discouraged that, I didn't have many more people that look like me in this business. So when I connected with DeVere, I was ecstatic. One, because of his professionalism, his legality of what he does, and he was just cool peeps. So I was looking forward to meeting him. So let me allow you to meet him too. DeVere Patton,
Hey, hey.
My Tax Office. How are you, sir?
I'm doing well. I'm doing well. I was like, oh,
Good.
who is she talking about all these nice things?
All of these accolades. Who is this? It is
Oh,
you,
me.
sir, all day long. So thank you so much. I know that this is tax season. I know this is a very, very busy time for you, but this is why I wanted to talk with you, because it is tax season. And we, small business owners, we need to get our ducks in a row if we haven't already. And you're gonna talk to us about timing and what to do on the off season and what to do during tax season and all that
Right.
good stuff, right? So,
Exactly.
thank you so much for taking time out to share with the little people of the world your knowledge. So, I really, really appreciate you.
Oh, thank you. I appreciate you inviting me on here.
So, let me start off with my typical questions. Oh, we already have some comments. Danielle Patton is already in the house. Hi.
Same
Thank you
last
so
name.
much.
What
I know.
what a
I wonder who that
coincidence.
is. Hmm. Hmm. Welcome, Miss Patton.
That's actually my sister.
Oh, okay. Oh, well, good thing I didn't say Mrs. Woo. Okay. All righty. So, DeVere, when and what drove you into the tax business?
So I'll try and make a long story short. I know we have time, but I can get I can get long-winded. So, so what drove me into the tax business? Actually, I've been doing taxes or a long time. It
Okay.
said 15 years, but of course I've been doing my own taxes and I was doing some
Mm-hmm.
friends' taxes, and it actually started off. My mother's probably listening with my sister too. It actually
Oh, okay.
started off with um, when I was young. I remember my mother is a math teacher, and she
Oh,
was sitting at the card table. Um, that was set up in her bedroom and doing taxes. And, you didn't have a computer and everything back then. I'm old. Uh,
right.
so you had, pencil and paper and everything. I remember her up there doing taxes and just watching her and everything. And then even every once in a while, I believe I would, she would say, here, add this up or something.
Mm-hmm.
So I considered myself doing taxes back then, but I really
But you was at numbers that count.
and then later on in life, just looking for a business, something to do. Got tired of the regular 9 to 5, and I'm a entrepreneur at heart.
Mm-hmm.
So later on in life, I was looking through a Black Enterprise magazine, and I saw an advertisement to purchase a franchise, and it was a tax franchise. And I know the things that they say always make money is taxes and death.
Mm-hmm.
Um, so you can be a mortician, or tax or own a tax office. So this is a black-owned tax office. In the beginning, I joined a franchise, and I will give them a
Mm.
shout out. It was called Cobra Ball Tax Service.
Okay.
Because I'll give them a shout out because they started me off, and some young African American gentlemen down in Texas, and they ended up being like the second largest black tax franchise in America.
Awesome.
So I started off with them, and then we're still, so shout out to Al Colbert and JJ Ball. Um, and then after that, I just went out on my own because there's no, if you're in the Maryland DC area, there was no other Cobra Ball tax service around in this area. So I
Mm-hmm.
broke off from them and just started a tax office on my own. And eventually I hope to be a franchise
Okay.
um, and be able to sell. So that was it. Long
So
story.
you were affiliated with another mainstream tax
Yeah,
office and you decided to branch on your own. Talk
right.
about how that worked. How did you steal clients? Did you take the clients with you? Or
Well,
did you yeah, like what did that look like?
well, I did because in this area there were no um, tax offices, Colbert Ball tax service tax offices around here.
Mm-hmm.
So um, my customers came because of you know who I am and who work with me. I had a business manager and everything. So they came because of the business that we did. They didn't come because we were a McDonald's or they knew the McDonald's name or the Chick-fil-A name or anything like that.
Right.
They came because we built our own clientele around here,
There you
even
go.
though we had somebody else's name up on our billboard, if you will.
Mm-hmm.
Uh, we built our own clientele. So when I parted from them after our contract was over, then we just, our customers just stayed with us.
Good, because the Patton name stood on its own.
Right,
Right.
right. Even though it's not called Patent Tax
I
Office.
mean, no. I mean, like you
Right.
as the tax preparer,
Exactly.
you
Exactly.
they wanted your expertise, not the
Exactly.
name, but Patton
Exactly. Exactly.
expertise.
Yep.
Okay. So when you started your own, you named it My Tax Two X's Office. Talk about how you came up with the name.
So we were sitting around, me and some friends. We were sitting around, said, "Well, what should I call my tax office?" Oh.
Duh. Okay. That was
so then,
easy.
so then, did a search for it and the name and everything. But if you do the 1X, there's a lot of things that come up. Um, I don't think there's any named office called My Tax of 1X, but we wanted to be a little bit different. So
Mm-hmm.
the second X
Mm-hmm.
is for the extra savings. So
Okay.
and then also it's easy to remember.
Yeah.
My tax office, even my phone number. Um, and I'm gonna give it to you now. It's 844
844.
4, the number 4, 844 my tax. And that's I'm trying to point to my sign here. 844 MYTAXX for my tax. So that's how you can, easy
I
to remember.
like
Always
it.
remember the name, and then it's a kind of cutesy little quote. Who you
Yeah.
go to? Who you go to get your taxes done? Oh, I go to my tax office.
Is that
Huh?
right?
Yeah,
For
yeah,
my tax?
yeah. Four. No, the number 4.
Oh,
844 my tax.
okay. Let me correct that. Eight.
And
I was
then
like, I thought that was too many numbers. Okay.
yeah, the 844, then for my tax.
For my tax. Two X's. Okay.
And
Let's
that
see.
ends up being, for anybody who doesn't, then that's 844-469-8299. But
Like, this is too
but
hard.
but
Okay.
see that, yeah, that's too hard. Remember,
For
eight
my
four four
tax. There
for
you
my
go.
tax.
Thank you, Samuel.
And then another patent. Uh, what do you
Welcome,
know?
welcome. So if you joined us, please give us a comment so we'll know that you're here. So we can say hello. So we'll know you. So that we know that you're here. So I see Danielle. Hi. I see Akiva. Hi. I see Samuel. He helped me out with the numbers because he was like, "Let me help this out." Okay. See.
And I see Akiva ask, "Am I taking more
Oh.
clients?" I definitely am. Yes, I am. Yes,
let's
I
let's
am.
let's just get right to the questions, right, Akiva? I need to know. Are you taking
Charity Pat,
clients right now?
Charity Patton. What do you know? What do you know? That's my mom.
Hi, welcome, join us. Miss Dana, welcome, join us.
I saw earlier Terry Medley. That's my cousin.
Did I miss?
Everybody's
Oh,
joined.
that's okay. That's on your chat. Y'all have to join the
Oh,
Facebook
yeah,
She a
on the
Boss
other chat.
page so I can see. Brenda, welcome, guys. Awesome. Okay, so let's get back to let's get back to the
so
show.
so real quick. So what
Oh,
I was saying. So with my tax also, it's like it was the simple, like a little cute thing. Who do you people ask? So where do you go to get your taxes done? And then they say, oh, I go to my tax office, and then so it's kind of like a Abbott and Costello. Where my tax office. So
yeah. Right. Awesome. So glad that everyone can join us. Okay, so next question. Now, I think you touched a little bit on it already, but you being a tax preparer, is it your passion, your gift, or otherwise?
I would say both. I have
Both.
it's definitely a passion. Um,
Okay.
actually, no, that's not true. Taxes are not my passion. My
Okay.
passion is to help. help out my community.
There we go. I like
Um,
that.
so I and then I have a just little tidbits on the side that I haven't even talked to you about. I'm a deacon at my church.
Okay.
Um, so I do have a gift of service. So
Mm-hmm.
doing that, I want to, help serve the community and
Mm-hmm.
help out my community. And what I found out when I was looking for tax offices in the beginning, I didn't just jump over to the Cobra Ball. I looked at Jackson and Hewitt. I looked at H&R Block and everything,
Okay.
and I realized that about our people are comprised of about 80% of the customers that go to your Jackson Hewitts, your Liberties, and things
That's
like that.
true.
About 80%, but the owners are only about 20%.
Mm-hmm.
With only 20% black. So the money is going into other communities.
Mm-hmm.
So I wanted to, first of all, keep the money in our own community. That's why I went to a black owned tax office, even though it's not as well known as
Right.
the other ones, as the bigger ones. But keep the money in our community. So even the money that I was paying them for a franchise fee was going back to our community.
Our community. Yep.
Um, and then uh, a lot of the bigger names, that's what you pay for. They kind of, a lot of times you pay too much. So I wanted to try and uh, let people know, keep them out of jail, if you will.
Mm.
Um, so I'm being on, do honest taxes for them, keep them out of jail, even though they may not, if they go to, Joe on the street, he may be able to give them back all this money, but I can tell them why. Um, you know, if it's right, I'll let them know. If it's wrong, I'll let them know. I'll do their taxes like that. So just being honest with them and everything, and that's why I'm able to keep a lot of or retain a lot of my clients year
Mm-hmm.
after year. I get them back. I get them back as much as legally possible.
So let
So
me pause for you right there because you
uh-huh.
said something very important that a lot of us do, right? Cousin Ray Ray, he know how to do taxes. He can
Hmm.
add. He did his own for years. He does other cousin. He does auntie. He does uncle. I'm gonna go ahead and let him do my taxes too. So they can finagle numbers, right? And give you and get you a larger amount. But is it right? Right? Is if you were to be audited, will it be right? So
Right.
that's what you are emphasizing, right?
Correct.
You're going to
Exactly.
get you as much as legally possible so you don't end up, clink clink
Correct.
and in
Correct.
trouble because we don't
Correct.
nobody wants that.
Correct. As a matter of fact, just the other day, I was looking at someone's taxes, and they weren't looking to get a lot of money back. They were just looking. They're honest people, so they
Hmm.
just wanted to do honest taxes.
Yeah.
And then so I looked at their taxes, and they said, "Well, my taxpayer got me back a lot more last year." I said, "Well, what did you do different?" Nothing. So I said, "Well, let me see let me see last year's taxes,"
Hmm.
and they claimed their tax preparer claimed medical expenses, $15,000 worth of medical expenses. And I said, well, you had all these medical expenses last year, so that's why you got more money back last year. I was like,
Mm.
medical expenses? No, nothing was wrong. I said, oh, you got to, yes, you'll get away with it IRS has 7 years to come back to you.
Mm.
So they can look at, they can go back 7 years and then
Seven
say, oh,
years.
so if you may get away with it the first year, first, second year, third year, fourth year, all the way up to the 6th year. If you get past the 7th year, hey, congratulations. But but you don't want to have to worry about the IRS coming after you, because then they're
Right.
going to want the money back. They're going to
Hmm.
want interest. They're going to charge you penalties. You're not going to be able to you may not be able to find that taxpayer or that tax preparer
Hmm.
anymore. So it's all on you. And
Right.
for the most part, they look at it for the most part. you're the one who signed it. You should have gone over your taxes. So you're the one who got the money. Yes, they will come after the tax preparer, definitely, but
Hmm.
you got the money. So they'll get the tax preparer for the fraudulent for filing it fraudulent, but you're the one who owes the money
Who's going
still.
to have to pay back that money that
Right.
he got you?
Yep.
That
Yep.
makes sense.
And all that for maybe $1,000 more or something like
$1,000.
that. It
Yeah.
wasn't 15,000 more dollars. It was like just $1,000 more.
Hmm.
Maybe two at the max. Um, because it's not dollar for dollar. Once you write off things, it's not dollar for dollar.
Hmm. Okay. Well, with that being said, this is your show.
This is
Teach
my
me.
show.
Teach me. Tell me
All right.
what to do this year. Okay, so let me just give you a little bit about myself. One point that I wanted to mention that I really enjoyed when we were having our initial conversation. We were talking about having fraudulent preparers do your taxes just to get you more. And you said something that still sticks with me. He was like, and you know why? Pay Caesar's what is Caesar's.
Mm-hmm.
And I was like,
Yep.
yeah,
Yep.
that's absolutely
I
true.
mean,
If you
yeah,
owe it, just pay it and
exactly.
everybody will be fine.
Exactly. One thing, everybody doesn't want to pay a lot of taxes, but
Hmm.
one thing I learned a long time ago, I heard someone say, I want to pay $1 million in taxes. And they're like, what? You crazy? And I said, well, what? They said, because if I paid $1 million in taxes, that means I made about $20 million that year. So, so, hey,
A point.
pay Caesar with Caesar's. Yeah,
Yeah.
yes, there are loopholes, especially when you get into making that much money. You heard that Donald Trump only paid 750. I don't know if that's true or
750.
not, but that's what they say. He only paid 750 because there are loopholes. He probably
Hmm.
legally paid 750. You know, there are loopholes. Now, but as you said, the word says, even though we do taxes for everybody, you don't have to be a Christian. Um,
Right.
but I don't apologize for who I am. So we do taxes, do taxes for
Every day, all
everybody.
day. Every day, all day.
So yep, pay Caesar's with
For
Caesar,
Caesar.
and pay your tithes. One thing
Thank
they
you,
did,
Deacon.
one thing they did with this year's with well, not this year's, with once the past administration came in, they
Hmm.
gave us more standard deductions. Now I'm not don't know if I'm going to get into standard deduction versus um, itemized deductions,
Hmm.
but you get one or the other. You don't get both. So what they did was raise the standard deduction level. So let's say if you're single, you may your standard deduction maybe, like, I'm just using a number, say $18,000 with some children or something, and then so you pay your tithes. You're a church goer, Christian, and you pay your tithes. Um, but your tithes, you make $60,000, so your tithes is $6,000.
Hmm.
So you either take your standard deduction or your itemized deduction, and then if your standard deduction is higher, that's the one you take. So if your standard deduction is $18,000 and you pay your tithes and it was $6,000, then that doesn't even go on your taxes. Um, so I was kind of leery about when they did that, because now if you're not tithing for the right reasons, if you were only tithing to get a deduction on your taxes,
Yeah.
then now you're not getting that deduction anymore. Not
Hmm.
with and
Hmm.
there's ways to get it. Of course, you 6,000, then you add other itemized deductions on top of that,
One time. Okay.
to like if you own a house or something like that, you add
Hmm.
other deductions on top of that to exceed the $18,000, but you take the higher of the standard or the itemized deduction. But a lot of times, if you're living in an apartment and you just pay your tithes or um, or what have you, then your tithes really doesn't count on toward your taxes. But don't worry about that. You're not tithing for your taxes. You're tithing
Right.
you're tithing to God
Right. For the
for
Lord anyway.
that. Yes.
Okay, so
Um,
before we get deeper into
yes.
that, this segment or this platform is business mindset. So just keep it, not you, my viewers, the viewers, keep in mind that this will focus on business taxes, and he's going to throw some personal because one for one, you are a person that owns a business, so some things are connected, but this platform is for small business owners like myself. Assured, see, there we go again,
There
DeVere.
you go.
Assured, assured business office services. Um, I just launched my business in October. So this is why I felt that I needed to talk to an official tax preparer because now I need to file my business taxes. I am a LLC as well, so it's going to be filed separately as opposed to my personal. See, you gonna tell me all of that. See, this is why I got my notebook and pen because you want to school me. That's what I'm talking about, people. Have your notebook and your pen. If you don't, get ready to get schooled. Cause see, that's what's like, no, that's not even right. See, that's what I'm saying. So this is what we're talking about tonight, people. We are talking about business taxes. Okay. All right, DeVere.
All right, all right. So with that being said, with what you just said, the business taxes, I also do, of course do individual taxes, and yes,
Yes.
I am accepting
New
for
clients.
new clients at any time, in any place. Just give me a call. Um, the business taxes, there's or it really depends on what type of how your business is structured. You just told me yours is an LLC. Um, Structures like corporations and everything, they have to file their taxes separately from their personal taxes. But other structures like sole proprietorships, even
Mm-hmm.
LLC, single owner LLCs, or even an LLP, a partnership. If you do have a partner or something, you can still file it with your personal taxes. Um, so
So when do you file it separately?
you file separately, like definitely if you're a corporation. Um, if you're an LLC, you can choose to be treated as a corporation. Um, like there's S corps, C corps,
Mm-hmm.
different types of corporations. You can choose to treat it as a corporation, but it's really that's for I believe who my audience is. We're talking small businesses.
Right.
Um, so we're talking LLCs and sole proprietorships.
Correct.
Um, so really, you can file those, and it's probably simpler to file those with your individual taxes, and you can do a LLC um, on a just on a Schedule C. You can do it. You can do it on a Schedule C. If you do have a partnership, then there's also other forms like a 1065 and everything. Really, you should go to your. I stop saying all the time. You go to your tax preparer, a professional tax preparer, and they should
Like
know. Like
mytaxoffice.com.
my tax office.
Oh, okay. Mm-hmm.
If you know you've heard the saying before, hey, I'm not a doctor. I don't go and do your work
Right.
or whatever. Then rely on the tax professional. Don't
Mm-hmm.
just rely. Sometimes if you have real simple ones, but we're not talking real simple ones because we're talking small businesses. Once we get into a business return, then now it's more difficult, and you should seek a professional. If you just have one job yourself, um, and it's a real simple return, then go ahead and do it on your own. I mean, I can still try and get you back, more than what's more than what you may be able to get, because I do know some of the loopholes, or some of the things, that legal loopholes, or
Hmm.
some of the
Clarify
other
that. Hmm.
items that you can or should claim. Uh, but a lot of times, if yours is super simple, 1040
Hmm.
easy, then go ahead and do it.
So we
Um,
have a question. Is there an advantage to filing separately?
no, not really. Um,
Okay.
if you decide to file it separately, you can do it at different times. It doesn't all have to be done by April 15th, but doing it separately, you do have to, like if you have an LLC, you do have to do, um, you're supposed to pay your estimated quarterly taxes. And we'll show you how to do that. And as a matter of fact, once you do your taxes, you'll get an estimated quarterly tax in your return, um, in your paperwork that you get back. And so that'll show you on you need to pay it on the 15th of April, and then 3 months later, May, June, July, August, September, October, November, December, January, and then, yeah. So it's every
Oh,
3 months you pay your quarterly taxes. Uh, so, but
see,
there's
that's
no
something I did not know.
yeah there's no real advantage to doing it separately. Yeah, no, that I can think of. Yeah, none that I
No
can
matter
think of.
how big or small you are.
Well, if you're a corporation, with an
I mean, yeah.
LLC, yeah, if you with an LLC,
Hmm.
I mean, you can be a big LLC, yes,
Yeah.
but uh, if it's just you and one or two partners,
Handful. Yeah.
right, then yeah, I can't think of any advantage of doing it
Advantage.
separately.
Okay.
Not to say that there is none, and there'll probably be some tax professionals also on here that may say, may feel differently. That's my personal. I don't feel that there's I'm doing your taxes anyway, so it doesn't matter if I do them, you know, to
Together or separately.
together or separate. It's probably easier for you to do it together, because then when you do it separate, then you have to claim also, the income that you paid yourself, and then you have to make sure you claim that
Mm.
on your personal taxes. When you do it together, it's all there. It's all there in one thing, in
Okay.
one simple thing, and it's separate on your individual tax return. So it's a Schedule C,
Hmm.
um, or like I said, or 1065. So it's a separate form. So you can actually look at, these are my business taxes. If you had to show somebody, these are my business taxes on one hand, and this is my personal taxes. But then you just put it together, and
Okay.
and that's it.
So just because you're filing it together, you're still showing it separately on
Correct.
the different forms.
Correct. Yeah,
That makes sense.
it shows you, if you're a partnership, it shows you how much, like if you own 60% and your partner own 40%,
Hmm.
it's going to show that split. You a 60% profit, 60% of the losses. It shows it on it's called a K1 that each partner gets, that you'll that you put on your personal returns. So
You
you
said
so you,
K1.
Yeah, that's called
I
a
hope
that's
y'all
called
taking notes because I'm gonna keep asking. Hold on. Let me write this down because
a
Okay, so I'm gonna be selfish just for a moment because this is business mindset with SheABOS. So
she a boss. She a boss.
she
And I do love that. I do love
boss.
that name. She a boss.
Thank you, thank you. So again, as I just launched, yay, I am. As I just launched, can you tell me, like, last year when I filed, well, this year when I filed my preparer, I expressed the fact that I started my new business, and he's like, "Oh, don't worry about it. We can wait till, next year and, get everything in order. You don't have to file for the first couple of months." So can you share with me, like, how do I need to prepare myself for next year? What do I need to do now to prepare myself for this time next year?
Okay. And I won't just answer to you, but I'll answer
I
to
said I'm
those.
being selfish, DeVere.
Well, I'm sorry,
No.
but I'm going to answer your question. But for those who are not who may not be as prepared as I believe you are, so I'm going to
Hmm.
start a little
Okay.
bit before you are.
We're helping everyone.
Like like you need to get an EIN number.
Yep.
And that's not necessary. You don't
Hmm.
have to get an you don't have to have an EIN number
Really?
to right. You don't have to have an EIN number to have a sole proprietorship. Now
Oh,
LLC,
right,
yes.
right. Not for sole
Right.
proprietorship, but you do for LLC.
Right. Yes.
Okay. Thank you.
Yes. And and then so that's the first thing that you should do. I even recommend it for the sole proprietor, self-employed or what have
Hmm.
you. I even
Hmm.
recommend it for that.
Hmm.
Um, and then a business bank account.
Yep.
Definitely a separate bank account because you have to know this is the business expenses and this is personal expenses. You have to definitely keep that separate.
Okay.
And with technology nowadays, um, you can go on just download an app that's going to tell you your mileage,
Hmm.
your business, your mileage and everything, so you can turn it on every time you drive for business and everything. So you don't have to sit there and remember how many miles you drove and this and that. You can just pull up a report. Just remember, just keep it on, or just turn it on every time you run out the business. Remember to do that.
Hmm.
Well,
That's a good point.
another one is there's also a good free site that I found, and there's probably others. I don't even can't even think of the name of it right now, but it helps you keep more of your business expenses in order.
Hmm.
You have to really be a good administrator, and I'm not. That's why I'm getting this. That's why I get these apps. I find these apps or downloads and everything, and yeah, they want you to buy more once you try them out and everything. They want you to buy more, but uh, organization
Hmm.
organization. If you're not organized, then find some apps that'll help you get organized, or find some people, maybe your husband, your wife,
Shameless plug.
uh-huh.
Ashore Business Office Services. This is what we do.
That's what you do.
This is what we do. So we establish businesses. We help establish businesses because a lot of people do things for years and they're not established. They're not
Mhm.
legalized, right?
Right.
So Assured Business Office Services, SheABOS, a boss, is what we do is help establish businesses. Phase one, if you're already established, like my tax office LLC, you already done that. Phase two, we support administratively your tax, not tax, but well, yes, tax, any kind of bookkeeping, financial tracking, invoicing, organization, whatever you need within your office management. That's what SheABOS helps support. So if you are in that situation, or if you are working so hard, like you just said, you don't want to do it. Not that you can't, not that you don't have the knowledge to, you may not just have the time to.
Mm-hmm.
Then that's what we do for you. So
And
SheABOS.com. Check me
SheABoss.com.
out. Okay, sorry, go ahead. Shameless plug.
Oh no, I loved it. I loved it. 'Cause right on time, because that's exactly what you need.
Mm-hmm.
Exactly what you need to do. Because if you were ever to get audited, then they want your see your good record keeping and
Records.
everything.
Mm-hmm.
Uh, Prayerfully, the way that I do your taxes, then if you know I'm not going to cause anything that causes an audit. There's some things that you put on your taxes that just cause an audit. It's called a red flag, and that just causes an audit. I'm not going, I'll let you know if this is a red flag, but if it's real, then that's what it is. So talking about small businesses, a lot of times nowadays, especially in this day and age, people want to write off their home office.
Mm.
because we're all working from home now.
Mm-hmm.
Um, as a matter of fact, I had locations, and I shut them down actually before COVID, just to save on the overhead. I was paying so much a month for the rent and everything, so save on all the overhead. I went virtual right before COVID. I was virtual in 19. Um, so so I was ready for this. But for those of us who are working from home and want to write off a home office space, there's certain rules certain rules with that.
Okay.
If you do get home office space is number one going to be it's a small red flag. If you say you have a home office space, it's a red flag, because now you're writing off part of your home, your
Right.
utilities, and this and that. So and that could cause an IRS visit. Um,
Oh.
but it's okay. Don't worry about it
Okay.
if it's legit.
Okay. It's
They
legit. I mean, I have a
yeah.
whole room.
So you exactly. So don't worry about it. So what happens is I did have some customers before that her entire basement was a daycare center.
A
Um,
lot.
and they had so we wrote off the whole office, the whole basement.
Mm.
But they ended up getting an audit. And part of it, I didn't go over there to look and see and everything. I was just asking questions, but I didn't go over there to look and see. Part of it, her washer and dryer was down in the basement, and so the IRS was like, well, this part of it you can't count because this is not only used for the daycare. This is used for your personal use also. So you can't count that. So if you have an office where if the IRS comes and visits and you got toys on the floor and they see your children are in there, in that office doing their homework, doing their schoolwork during the daytime nowadays, um, then you can't write that off, because it's not 100% for the business. Look at it like a brick and mortar. If you
Mm-hmm.
have a brick and
Mm-hmm.
mortar space, that's only used for that business. So take that brick and mortar space and put it in your house. If that space in your house
Okay.
is only used for that business, then you can write it off.
Okay.
Um,
That was one of my questions, so I'm glad that you emphasized that.
what was that? Which question was it?
The
The
office
home office,
space.
just home office in general.
Yes. Yeah,
Yeah.
just in general, like what the footage, does it have to be a minimum footage or just the area, and it has to be the sole purpose of the business in that area. um can you write off like the laptops and the printers and
Hmm.
everything
Definitely.
else that had to be purchased to produce the business? Is that all things that can be written off as well?
Yes, definitely. The paper, the ink, um, all of that.
See, I forgot about the ink. Ink is a lot. You know how
Ink is
expensive
expensive.
ink
Ink
is?
is
My
expensive.
gosh, I'm like, I'm not printing another thing. We just gonna have to take notes. Expensive.
So yes, you can write all that off, and then
Okay.
part of your question was like the square footage. So you
Yeah.
take this. There's a couple ways to do it. There's a simplified way and a more detailed way. So if you know the square footage of your room and then the square footage of your house, then you put that in. Let me simplify things real quick. Thousand square foot house, 100 square foot room that you use just for business. So that's 10%.
Okay.
So then you end up writing off like how much were your utilities, how much
Hmm.
were so you add up all your utilities, how much was your was it, oh, your mortgage interest. So part of that same 10% is written off for your mortgage interest and everything like that. But you put it on the computers are great nowadays. So you just put it in there and it spits out the information for you. You do also get um, depreciation off of your
Hmm.
house. You can get depreciation off of your car. Expensive items. If you have one of those, expensive printers or anything like that, you can write
Hmm.
off depreciation on things like that. Your expensive
Okay.
items and um, that you use for your business. Uh, so that's your home. That's your home office.
Yes.
Again, there's different ways to set up a business. Let me make sure I covered all this. You can be self-employed. A lot of us are doing Uber or DoorDash. You're actually self-employed.
Okay.
Don't necessarily have to go out and get an EIN for that. But you do fill out a Schedule C, and it's the same thing. Keep your receipts. A lot
Hmm.
of times, gas mileage. I mean, mileage is better than gas expenses or maintenance on your car, because I believe it's you get 52 cent, I believe, a year or not a year, 52 cent a mile, I believe, written off. So if you write off um, if you drive 1,000 miles, which you do a lot for Lyft and Uber and DoorDash, you drive a lot of miles. If you get 52 cents a mile, 1,000 miles, that's $520 off right there. And again, before, like I said, it's not dollar for dollar. So if you write off uh, $520, or let's say your expenses $1,000. I like to keep our numbers real simple. If you write off $1,000, you're not. That doesn't mean you get $1,000 extra money refund. That means if your regular income was $50,000, taxable income was $50,000, and you wrote off $1,000 in business expenses, now your taxable income is $49,000. So you're still taxed on the 49,000 instead of the 50,000. It's not you now get $1,000 more in your pocket. No, it doesn't work like that. So that's the self-employed. Um, there's sole proprietorships, which you could have been.
Hmm.
Um, if you're LLC that's with a single owner, there's the you also could have chosen sole proprietorship, but I recommend LLCs. There's also sites on there, and then does SheABOS, does Assure Business Office Solutions do that? Help you go decide which LLC or as okay, great.
Yes,
So
absolutely.
I was
Yep.
getting ready to say something, a website, but I'm go to SheABOS, and she's gonna help
See,
you out.
see, defer to the professionals.
Exactly, and she's gonna help you out how to decide where you want to,
Right.
or how you want to set up your business, structure your business,
Hmm.
um, even where you want to incorporate. I'm originally from Delaware,
That's true
Wilmington,
as well.
Delaware, so that's one of the best places to incorporate because of uh, business tax reasons and
Right.
things like that. But
Yep.
not going. That's deeper than deep. Uh, kind of keep it simple here.
Hmm.
Um, let's see. So that's your business structures. Really not going to get into the S corps or C corps. If you do have questions about that, maybe you can uh, give Angela a call or give me a call. I really don't do that for a living. I just you know I have a recommendation, but you want to go to someone who really knows, and then come to me for your taxes once
Right.
it get them done. And not only your taxes, so that's the structure. We got that part of it, right? We good? Any more questions for you, Angela? Any more questions out there?
Nope.
All right. So, all right. So then with that, then we not only do the taxes at my tax office, but we also do financial services. I am a certified financial education instructor. Um, I teach at my church to the youth. I teach
Okay.
finances because we didn't learn it as most of us didn't learn it as a youth.
That's true.
So I teach a financial class from A to Z at my church. Um, and then what you should know about with business, the small businesses should know about their finances, especially someone as young as you are, Miss Angela. You want to you want to start putting away for your retirement. Um,
So we're now converting, right? So we've
right,
done the taxes. I received my return. I
right,
got a little bit of change.
right, and that's
So now DeVere Patton, mytaxoffice.com can tell me what I can do with that little bit of change.
exactly,
Okay.
exactly.
All right.
Because with taxes, because with taxes, there's, I mean, I don't know, and I was explaining this to you when we met, like if this could be an hour show just doing doing taxes, I
Right.
can sit here and do somebody's taxes for an hour and everything, but everybody's is different. Every
Situation is
single tax
different.
return, there's no single tax return I did that was the exact same.
Mm-hmm.
Not a one. And I've done thousands of taxes over the years. Um, so tens of thousands probably over the years by now. And,
Mm.
and there's no two that's the same. So
Okay.
there's nothing that I basically, my message here is do your taxes. Let me come to me. Let me get your taxes done. Let me get them done correctly. We're going to talk. I do everything virtually nowadays.
Mm-hmm.
So if we do need to meet, we can meet like we are here. Have a secure portal that you can put your information in, so none of your information can get stolen or lost or anything. Um, so there's not much to talk about unless somebody has some questions. I can ask some specific questions as much as I can, but you want to. I'm,
But
I'm just going over what we went over. Just you want to set up your business structure correctly.
mm-hmm.
You can do your quarterly taxes, but this is all going to come out on your taxes. I prefer to do them all together. That way, you don't have to remember when your fiscal year is, because you can have a different fiscal year than January 1st to December 31st. If you want to start your fiscal year, your business on March 1st or March 22nd or whatever, then that'll be your fiscal year. Then you have to worry about when the taxes due then. So just keep it simple. So even though you may have started last year in the middle of the year, then you can still write off what you did from March, or let's say you started in July. You can still write off on this year's taxes what you did from July until December, because you had
Mm-hmm.
some startup fees that you did. And
Absolutely.
so yeah, you can still write it off. You wait till next year, but why wait? Write it off and start it now.
Why wait? Contact SheABOS.com and help get your organization and your establishment of your business.
That's right. Now, a lot of those that are starting businesses now, you want to think about your future, think about your children's future, leave a legacy, and that the word tells you to leave a legacy also. So
Mm-hmm.
you want to leave a legacy. I always want to be, maybe have my picture on the mantle, um, and my great grandchildren say, "Hey, who's that right there? Oh, that's your great
Yeah.
great grandfather. He's the one who left us all this why we're in this
This
position
is
we're
why
in
we're
today. He
comfortable.
left us millions of dollars. Right? You're just comfortable, right? Exactly.
Mm-hmm.
You don't want to
Okay.
end up. A lot of us are living paycheck to paycheck. We do have solutions for everyone. You can't see it, but at the bottom of one of my posters here, or one of my billboards says, "Helping all people achieve financial security and peace of mind." Helping all people achieve financial security and peace of
Do
mind.
that. Do that again. Shift. Let me
Let me
see.
see. So let me see. It's this
That's
one.
good.
Well, let me pick up my camera.
Oh, see,
is
you didn't even have to do all
is
of
this one
that.
down here?
Okay.
This is who
Oh,
we're
that
team.
one there. I didn't see that one. Okay.
This is who we're team with, helping all people achieve financial
I
security and
like
peace
it.
of mind. And this is what we
I
do at
like
my
it.
tax office: tax planning, tax-free income for life, retirement planning, life insurance planning, annuities, college planning. Um,
I like it a lot.
So that's what we do now. I gotta get centered here because I
I'm
got in
sorry.
trouble earlier, y'all, for not being centered.
It's like, move over a little bit more. So we do have a question, DeVere. It was a very
Okay.
it was an actual good question. Oh wait, was better question. Okay, let's pick the better question then. Okay, better question. What's one thing someone can do tax wise in preparation to start a small business? That is a good question.
What is one thing people can do? Say it again.
What's
Oh,
one
I
thing
see it down the bottom
someone
here.
can do tax wise in preparation to start a small business? So it's that person that's one of my clients, a chef, for instance, not legalized yet in the sense of they don't have their sole proprietorship or they're not they don't have their LLC. We're working on that now. But what can I tell those clients who have not yet been established or those clients that come to me wanting to establish a small business and as I am advising them on how to start their small business, when to start and what to do, what one thing can I offer them tax wise?
Tax wise, well, really on the tax side of it, we need to know what the structure is. So everything that you're doing in the beginning to set up your business is for really for tax purposes.
Mm-hmm.
Um, so
Yeah.
when you get the LLC or the different corporate or different S corp, C corp, or decide to be a sole proprietor, that
Mm-hmm.
that's also for tax purposes.
Yeah.
And then everything that we talked about, organization. Make sure you're organized because, um, like I said, no, an audit. You don't want to have to worry like right now, if I get audited, I'm okay with that. I
Yeah.
don't want to get audited, but I'm okay with that because
Because you're prepared.
yes,
Mm-hmm.
exactly.
Mm-hmm.
Exactly. I have nothing to worry about and everything. So basically it's the organization, how you're set up. It's best to get a bank account, but all this you're going to go through a short business office services to other way. Going to go through a short business office services, and that helps you
Yeah.
get your EIN number. Um, it helps you get ready for your taxes.
Yeah.
Um, a lot of times, people who aren't prepared as far as their receipts and everything, one of the main things I tell them will get a business bank account and then spend everything, all business
A long
things
call.
out of there.
Yep.
So even if you don't keep your receipts or you don't do this and don't do that, then at least you have that, your statements, your monthly statements that say how much came in and how much went out. And
Yep.
then you can go through there and say, why it went out. If you wrote a check, I don't know how many people do that nowadays, but you wrote a check, you can go back and see who that check was written to and
Yeah.
why. Um,
Mm-hmm.
or and so forth. If you need to spend personal money out of it, pay
Mm-hmm.
yourself. So go ahead and pay yourself. You need $500 extra this month, for whatever reason. Then pay yourself. You're the owner. Pay yourself out of that account. Move it to your personal account. Now that goes into your salary and everything. So
Okay, so quick question about that. You were talking about business accounts, and that is one of the tasks in phase 2 that SheABOS will offer you. But my one of my questions is it helpful to just have an account or a credit card as well, or does it even matter?
a credit card, but start off with a debit card. Um, to get a
Yeah.
credit card in in a business account,
What?
then you have to. Yeah, I still write checks. Good.
Right. It's like, what? I've had my checks for like 17 years in one book because that's how little I write checks.
so
Okay, so
so
some of
there
us still
there's
old school.
there's the site real quick. I have employees, and my son Sam, who's on here, he's one of our
Uh-huh.
employees. So I
Same
send them
thing with me.
electronic checks. They
Mm-hmm.
do that e-checks nowadays, where I can send it to him via email, and he can print it off, or deposit it to his bank, there. So there's different ways. So I have a checkbook that I opened up like 15 years ago. I probably still got
Right?
all my
I done
checks left.
dust it off. Do I even know where it is?
Exactly. I don't even know where it is.
It's in a box somewhere.
Exactly. So I don't do the, but the credit card,
Mm-hmm.
to establish, you'll have to, um, if you want it in the beginning, you'll have to do it under your social security number, and they're going to run your credit and everything. So I'm not actually, uh, um, I'm not actually skilled in getting the credit card for the business, and getting a you need a DUNS number and things like that. You
Oh,
you
don't
guys,
worry about that. That's what
that's what
SheABOS does.
that's what you do. Now see, I don't have one. Now
Mm-hmm.
see, now there we go.
Mm-hmm.
I got you. um so yeah, debit cards, you can
Okay.
go to. I found out in the beginning, credit unions don't do business accounts. I didn't know that in the beginning, because I only dealt
Uh,
with credit unions. I don't know if they changed. This was like years ago.
yeah. So
So
I can tell you yes,
okay,
some credit unions do business bank accounts.
okay. So let me say this: my credit union in the beginning, 15 years ago, didn't do business accounts.
Yeah.
So I had to open up one in a bank, and I will shout out the bank too. Industrial Bank is a black because it's a black
There
owned
you
business,
go.
black
Yep.
owned bank. So
Sure is.
I try and deal with them. Um, so I go to, and then so if you're not in the area, I believe I know there's other black owned banks, but
Yeah, there are.
industrial is big in the DMV, DC,
Hmm.
Maryland, Virginia area. So I use them. So I would
So we
recommend
have
that.
I'm sorry, DeVere.
Hmm.
We had a question. Can I write off my clothing allowance? That's a good question because
All depends.
I have to get dressed for my profession.
Can you know? Can
Just
now
bust my bubble real quick.
if your
You gotta
business
try.
if your business is a clothing business,
Hmm.
if your business requires a uniform,
Okay.
you can write off that. Can you write off, I saw this nice suit I needed to get and everything. Nah,
Ah, all right.
nah. I mean,
Well, we
you can
tried,
you
Kiva.
can
We
write
tried.
you can write off anything really, but yeah, I don't want to get you
I
because
want to get
we
through
have a whole list, and you can squeeze it in there, but then they'll look at that and say, oh, clothing, and then see any one red flag
it.
is a million red flags. Now I can audit the whole thing.
Oh, okay.
So so it's not like a warrant where they say, okay, well, I'm coming in, and I don't claim to be an expert on warrants, but where it has to indicate I'm looking for this, or searching such and such. No, if I see one wrong thing on your tax return, then I can go back. Then IRS
Do
can
the
go
whole
back,
thing.
go through the whole thing, go back 7 years, see if you were doing it all these years. Um, even your tax preparer, go back to your tax preparer and say, okay, if he did it for them, how many other people did he do it for?
Right. Then
Um,
everybody gets in trouble.
yeah, yeah, yep.
Okay. We have another question. Thank you. Oh, so let me thank you all for logging in, for joining us on this edition of Business Mindset with SheABOS, supporting DeVere Patton of mytaxoffice.com. And today's topic, again, receipts, finances, and taxes. Oh my,
Oh my.
part 2.
And I see somebody real quick said Julia Long.
Yes,
It's typically clothes that you cannot
you
wear
cannot wear
on
on
an
an
ordinary day.
ordinary day.
Correct.
Yeah.
Correct.
Okay, so question. Can I write off all of my household expenses to include some of my mortgage if my business is home-based with home-based office?
Your
So
mortgage
we touched a little bit. I'm
your
sorry.
mortgage interest.
Okay.
Your principal
Mortgage
is not is,
interest.
right. Your principal is not something that you can write off. Your mortgage interest.
Interest. Okay, so that's very specific.
Yes.
Mortgage. Okay, keep talking. I'm writing notes. Keep talking.
But in order to get to your mortgage, to touch your mortgage, that's where the depreciation comes in. So you can depreciate part of your house and everything.
Hmm.
Then that way, it's kind of related, to your mortgage. But you can't sit there and say, okay, I'm going to write off. I pay
A
this much
whole mortgage.
mortgage on your principal and everything, and write that off. No.
Okay. That's a
Uh,
that's a good question, Reese. Okay, we have this is
read,
no. Okay,
read
Mr.
the Sam.
Patton.
What did he say? I'm young.
What did he say? I'm young, 26. Something that helped me build my personal credit score was applying for a prepaid credit card and staying disciplined. If your child, niece, nephew, etc. helps needs help with their taxes, life insurance, and or financial advice, send them
It's
my
a,
way through my tax
it's a plug.
office. Of course, my tax office, get them started off the right way. Okay, Mr. Patton, the whole show is
Train,
about my tax office. So
train,
yeah,
look,
plug,
train them up the way they should
train
go.
them well, the way they should be raised. I'm not mad at you. All right. So
um,
continue.
yeah. So where were we on the? Okay, so retirement. We have
Hmm.
something for everybody.
Okay.
Um, Something for everybody. I don't care if young, old. If you're I this is actually exciting part. So
Okay.
so so like we have ways like Angela, you said that if you had a previous job or another job past life, and you have a 401k
Yes.
sitting over there somewhere.
Hmm.
I'm not going to give my secrets away here, but I can. If you have two
Because you
hundred
have to
thousand.
call for a consultation.
Exactly, because if you have $200,000 in your 401k, and I don't care who
Hmm.
you are and how old you are, or whatever, if you have 200 about $200,000 or so, just any amount sitting in your 401k right now, I can
Hmm.
show you how to turn that money into a $400,000 benefit tomorrow. So that
Okay.
$200,000, change it into a $400,000 benefit tomorrow. If you're in the if you're making $100,000
Hmm.
uh, or more, then um, we can show you how to put money away um, just for 5 years. You have to make sacrifices for 5 years,
Yeah.
and then get a lifetime income stream, tax-free income stream for just for putting away money for the next 5 years. To qualify for that one, you have to make, and it can be a combined between you, your husband, wife, combined $100,000. If you can put that away, put some of that away for the next 5 years. I can show you how to get a stream of income, tax-free stream of income for a lifetime. So that's something that's very interesting and
Yes,
everything.
please. Hmm.
So want to show you how to do that. We can show you how to do that. We can put away 401k, start your own retirement plan, uh, start your own 401k, IRA, Roth IRA, any type of I heard what your last guest talk about a SEP. You remember that?
Hmm. Yep.
So,
Send
so,
my notes.
so
Send my notes. Yep.
yep. So we can
CEP. Yep.
we
Hmm.
can do that
I mean
for you.
SEP. Sorry.
SEP. Yep.
Hmm.
Self-employed plan.
Yep.
Um, One of the things that we don't have, I'm going to talk about life insurance. Why am I
Okay.
going to talk about life insurance? Because that's a crucial part of your finances. It really is. It really is. A lot of us, if something happens to us, we end up, you know, going broke,
Yeah.
going doing, the family trying to bury you if you pass away. If just doing GoFundMe, having to pay off your house or this and that, or if they want to try and keep the house. So life insurance is a vital part that we missed. We meaning us. We missed.
Community. Yeah.
Yes, our
Our
community. We
community. Yes.
we missed. And then you have people coming in here, and I'm going to hurt some feelings here. I'm gonna tell a story, and this is me
I
personally.
ain't the devil. Tell the truth.
This is DeVere.
Okay.
This is DeVere's frame of thoughts, and not everybody's. There's a reason, and there's a reason for. There's different types of life insurance. There's term life insurance and basically permanent life insurance.
Okay.
I can help you out with either one, any one of them. I personally, again, this is me personally, don't enjoy or don't like term life insurance.
Why?
The reason why, I'll tell you. First of all, let me tell you a story.
Okay.
Because you told me we had time. So let so
Tell
let me tell you a story. When I was 22,
me.
you started off. I was selling term life insurance,
Okay.
and I was interested in riding motorcycles and everything back then. So so that makes your insurance go up a little bit. And then so when it was I know Julia, y'all. I'm sorry. Uh, um, I'm gonna tell you a story, Julia, and I'll tell you.
Mm-hmm.
And again, this is me. I told you I'm gonna hurt some feelings, but this
Yeah.
is so. Uh, when I was 22, I brought a $800,000 policy.
Mm-hmm.
I knew I was set. Knew I was good.
Optimistic of a 22-year-old.
Yeah, yeah, I was set. I was set. But
Okay.
really, it's death insurance. So they said buy term and invest the difference. And I was 22 years old. I wasn't investing nothing. I didn't have insurance before that, and then I didn't invest. So this hundred something dollars a month that I was spending, I didn't have extra to invest. So I didn't. So I did. So there was no investment. So I did the buy term, and I bought it for the next. I bought a 20-year term, $800,000. So now I'm 42 years old, and I got a letter in the mail that said, okay, now that your term is about to expire, now that you're 42, if you want the same $800,000 term life insurance,
Mm-hmm.
now it's going to cost you 600 something dollars a month.
Wow.
So for 20 years I paid 200 or 100 something dollars a month for religiously, never missed a payment. And then now that I'm 42, I had a family, I had children, I had a house,
Mm-hmm.
and I didn't have, I had a little bit of extra money, but I didn't have 600 extra, right then and there. So
Mm-hmm.
then I said, um, I'm reading something here. So, so I didn't have the money and everything to pay the $600 a month. So then, and I didn't die. So my wife didn't get rich. So
Here. Yeah.
so she didn't have $800,000. So all that money was going to waste. So now I was looking for something. So now I was looking for something else.
Okay.
Um, so then I decided I looked into something else and other things. So then I learned about later on in life. Even after that, I just went through my job insurance, which is also term.
Mm-hmm.
Once you lose your job or leave your job or something like that, then you no longer have insurance,
That life insurance.
because it's term. That's what it is. It's built for just a term. Now,
Okay.
now,
So hold on. Let me make sure I'm understanding what you're saying real quick. Term life insurance you're paying and it only is good up into a term. Duh. It
right.
makes sense. Now, the
Hmm.
terminology. So, for you, in your experience, in your situation, you purchased a 20-year term and it expired when you turned 42.
Right.
So, you are no longer covered for the 20 years that you paid into it. It expired.
Right.
Got it.
Yep. Yep. And then um, they trying to think how to put this. So, so like I said, I'm trying not to step on toes here because some people will definitely disagree with me. But we
But it's
can,
all about your
but
options.
yeah, yeah.
There's
I,
multiple options
and
for everything, and this platform is to just provide you all of the options.
exactly,
That's it.
exactly. Thank you. So, so with that being said, with the term, I lost the train of thought here.
Term and
So I
permanent.
didn't have it. Uh, so I didn't have insurance afterwards and everything. I know I was going to say. So term, you can look it up. You can Google this. Google this. It only pays out less than 2% of the time. So a lot of our people are buying term, not dying, because that's what they do. That's
Mm-hmm.
how they make their money. They have
Mm-hmm.
you pay all these people pay this money. So let's say if me, you, and 1,000 other people are paying $100 a month, so
Mm-hmm.
$1,200 a year. Let me make the number simple for me. A
Yeah.
thousand dollars a year for a million people. So now they just
Honey,
made all that money, whatever, $10 million or whatever, and then they only pay out
equals a lot.
they
Yeah.
only pay out less than 2% of the time. So then,
Mm-hmm.
they're going to pay this person a $500,000. Yeah, they're going to pay these 2% of people $100,000, $200,000, but they just got over 98% of the money without having to pay that out. So the insurance companies are some of the richest companies in the world. They're billion-dollar companies, billion-dollar businesses, and everything, and they rarely go out of business. You don't find an insurance company; they'll be bought out, but they rarely will go out of business. Insurance companies back the banks.
Yep.
They back your credit cards.
Yep.
They back and you look at things, and there's an insurance company backing it. So those are some of the wealthiest companies in the world. So one thing that wanted me to turn to finance, and this is a little bit different, but going on the same line. One thing that wanted me to turn to finance, I always knew, when the stock market crashes, everybody loses their money and everything.
Mm-hmm.
Um, but I always knew the money's not really lost. I mean, somebody if I drop $10 on the ground, that $10 is not gone forever. You just picked it up. So now somebody on the other side just got $10 richer.
Mm-hmm.
So if the stock market crashes, all that money's just not gone. Somebody's on the other side getting rich. So I always wanted to be, well, where is that rich side? I wanted to
Mm-hmm.
try and find that out. Didn't
Mm-hmm.
uh, they're not going to let us all on the rich side. But now what I can do is move you to the safe side. What does that mean? I secure your money. So if the
Mm-hmm.
stock market crashes, we put your money away where if the stock market crashes, you don't lose any money at all. These are called index products that we recommend putting your money into. You don't lose any money at all. So say the stock market rate went up 10%, then we can have you. There's ways that we can have your money go up with the stock market 10%. Um, but then if it crashes, like I understood that it did today or the last couple of days, I believe. Then say you had, I'm gonna stick with that $1,000. Say you had $1,000 and everybody went up 10%. So now you have $1,010 in that account, right?
Mm-hmm.
And then it crashes, then the people whose money is not secure, then they could, all depends how much it crashed, but they, if it crashed 10%, then really it crashed from $1,010, so it crashed more than $10. It crashed, it's underneath 1,000 now. Is
Mm-hmm.
that is that making sense to you?
Yes.
Okay, so but my money is secure, so I'm still up here at 1,010 dollars. So now
Mm-hmm.
when the stock market goes up, my money goes up. Do it this way: my money goes up and your money goes up. But look, my money's still above your money right here. So then, when it crashes again, yours will go down. Yours will
Mm-hmm.
crash down, and then
I'm gonna scream again.
mine will freeze. and
Mm-hmm.
stay right there. And
Okay.
now you have to work your way back up to here. Now there is a key to it. Like if the stock market goes up 36% or something like that, then most of the time I can find I do have some where um, well, index funds, correct. I'm looking at Julia Long's
Mm-hmm.
index funds, and I do, and these are index funds, yes.
Mm-hmm.
So I 100% agree with you. It's just mine is yes, 100%. That's what Warren Buffett also. So I'm on in good company here. Uh, um, so if the stock market goes up 36% or something like that, then yours may have a cap on it. But for the most part,
Okay.
yours may have, let's say, a 12% cap, 14% cap on it.
Mm-hmm.
Uh, and then, so yours may not go up the whole 36%. But I do have some uncapped strategies that I can show you that if the stock market goes up 36%, then yours will go up, let's, uncapped, but then it's going to cost you a little bit. So yours may go up 32% instead of 36%. We do have uncapped strategies, but in all of our strategies, you don't lose any money. And that's for your retirement fund. That's for your life insurance. Um, so going back to life insurance, because your life insurance is an investment. I saw someone say about whole life. There's different types of ways to invest your money. You can invest in secure products like CDs.
Mm-hmm.
I just looked at somebody told me they were thinking about getting a CD from this certain bank, and I looked it up, and their rate, their annual percentage rate that they were going to get on their money is
Mm-hmm.
0.05, a half a percent,
My.
a half a percent on the CD. Um, then there's you can be aggressive and invest in the stock market, a lot of Bitcoin and things like that.
Yeah.
But then the thing about that is you can lose all of your principal. And then there's index funds. So index funds is the best of both worlds. Safety of principal. You don't lose your principal, and when the market goes up, you go up. So you don't lose. It never go zero is your hero. It never goes below zero. So we have those products that we definitely recommend, and that's where our life insurance, the life insurance that I recommend, um, is also invested in. So like whole life, a couple of things about whole life you have to pay for your whole life, and they're very very safe. You may be getting 4% interest rate, um, and 2% interest rate or whatever, but you're not going to get where we invested in index funds, and then so you could get when the stock market goes up again. I'll just repeat that: when the stock market goes up, your savings account will go up, and when the stock market crashes, you have more. Now you have more savings account in within your life insurance policy.
Mm-hmm.
Then here's something that's very interesting. Life insurance is not your father's life insurance anymore. It's
Right.
not death insurance. So what I have is living benefits. So
Okay.
three things are going to happen to one of three things are going to happen to each and every one of us before we're all going to die, right? So
Yep.
that's number one. We're all going to die. Number two, we're going to the rest of us are going to get sick
Mm-hmm.
get sick. Something's going to happen. Go to the hospital. That's one of the leading causes of bankruptcy. When things bankruptcy, foreclosures, house foreclosures, those
Mm-hmm.
hospital bills and everything. And then the third thing, something could happen. You could live too long. You could outlive your money. You see
That's
those
true
people.
too.
Your retirement's gone, or you only some people don't have pensions. So that
Mm-hmm.
that $200,000 that could have turned into a lifetime income stream for you.
Mm-hmm.
If you didn't do that, then what happens is um, you now no longer have a lifetime income. You can run out of money. For this area of the DMV, your thrift savings plan. Eventually, your thrift savings plan is not a lifetime income stream. It's just when you run out of money, that's it. after you
That's it.
start spending it. So retire early when you run out of money, and then that's it. Then you just have your, if you're government, then you just have your pension to live on. And I understand now DC doesn't even have a pension anymore. DC government doesn't even have a pension anymore. It's all relying on where you invest your money, and eventually you're going to run out, and then you'll end up working at Walmart, being a Walmart greeter or something like that. Nothing wrong with
Not that
that. If that's
anything's wrong with being a
exactly, that's what I was
Walmart
saying. Not that anything's wrong with that, but that's not some people's plan on their life.
greeter. Right.
So what we
So,
have, what we have is living benefits where, let's say you did have the $800,000 policy, that I had when I was in my 20s. Now, if something happened to me, terminal illness, where the doctor said you have 24 months to live, then you now have access to that, to your life insurance. It's a
mhm,
living benefit, so you can say get 80% of that out. I'm gonna, I like to keep my numbers simple. So say you had $100,000 policy, 80% of it you can take out, up to 80% or so, and sometimes 85, but it's different policies. I'm a broker with different insurance companies, so it's different levels. But let's go with the 80%. So you take $80,000 out, you can use that for whatever you want. You can use it to, buy that car that you always wanted, or you don't
mhm,
have to use it for your medical expenses. Doctor gave you 2 years to live. You can, live your life. Use it for whatever
mhm.
you want, and then your family still has enough to bury you in. So you can take that. So you can take that money out for any reason at all, with the a terminal illness. Then you have a chronic illness or a critical illness where you're not, where you're not going to die, but let's say you had a stroke or a heart attack, and you needed to, pay some bills, pay your mortgage, income stopped coming in for whatever, but you can take it out again for whatever reason. Buy those red bottom shoes that you always wanted. Buy what,
Saving money.
but buy, do whatever. I had this wasn't my case, but a friend of mine, he,
So, DeVere,
uh-huh.
let me stop you there. So I wanted to first thank the live participants because we're running out of time. So I want to kind of wrap this up a little bit. But thank you so much. Thank you for the live visitors that joined us to listen to DeVere Patton in mytaxoffice.com. His number 844-469-8299 or 844 for my taxes. See, I got that. See
Got
how you
that.
have to have that little you have to have that little thing.
Can I answer a question here real quick? I think Julia Long said how much is paid out, and that's of the
Okay.
insurance policies.
So when you answer that question, you're gonna get that consultation. So you're going to go to DeVere Patton at
Thank
mytaxoffice.com and get that personal consultation. And then you can ask all the questions that you
got you.
want
Thank you.
for mytaxoffice.com. Get that consultation. Um, so again, thank you so very much for joining me on Business Mindset with SheABOS today with the topic of receipts,
Receipts,
finances, and
finances,
taxes.
taxes.
Oh
Oh
my.
my.
Part 2, focusing on taxes and finances. And we talked about receipts and the things that you have to organize in order to prepare for your taxes and what to do with your finances after you get your little bit change from your finances. So again, you can locate Mr. DeVere Patton on mytaxoffice.com for consultations, or if you want to become a client, he is accepting clients on first line. So thank you so very much. Do you have any parting remarks?
I just want to thank you. Just appreciate the opportunity. Um, anybody, I thank Angela for mentioning and letting me be on here, but also for everybody, please go see Angela. I'm with Assured Businesses Office Solution. Um,
Services.
please services. Please go see her. I'm going to use her also. I'm first in
Thank
line
you very much.
for that because I don't have a DUNS number or anything.
Hmm.
So we definitely need to get together, do more business. I just appreciate you. I really do. Like you said, anybody has any questions, they can call me.
And this is the platform, and this is why I developed this platform for our community to network, to get to get to know one another, to get knowledge, knowledge sharing, and just to build that network. And now I can say, oh, you need a tax preparer. I know my man, mytaxoffice.com, and then you
Go to
can
my
ask your
tax office.
clients. I'm sorry.
Go to my tax office. Well,
There
where's
we
that?
go.
My tax office.
MyTaxOffice.com. Just extra savings, two X's. And with you, when you have those clients that are thinking about small businesses, or you have a small business client that they're growing and they need office assistance, or they need to establish their small business, then I'm your girl, SheABOS.com. So we can all benefit from one another. And that is, that was my sole purpose on doing this platform. So again, thank you to my live participants. Thank you for joining. Um, mytaxoffice.com, SheABOS.com. Share with your friends because everybody needs this information. So peace.
And we out.
We out.